I'll start again. Good afternoon and welcome to the Audit and Governance Committee. My name is Councillor George Boyd, Chair of the Audit and Governance Committee. Before we start, I will go over some general housekeeping. This meeting is being held in person at County Hall and is also being streamed live on the County Council's YouTube channel. The recording will also be available to view afterwards. Under the Council's protocol on the use of media equipment at meetings held in public, this meeting may be filmed, recorded or photographed. Anyone wishing to do so must inform me and ensure that it is done in a way that is clearly visible to everyone present. The wishes of any individual not to be recorded or filmed must be appropriately respected. A fire alarm test is not expected during this meeting. If the alarm sounds, we must evacuate County Hall. In the event of emergency, please make your way to the nearest exit and meet at the muster point located on the main car park. With that over and done with, just before we start, I would like to thank outgoing Chair Councillor Mackie, who is the only member serving on this committee from before the election. We are lucky to still have you as a member of the committee, and we look forward to you imparting your wisdom gained over many years of service. I would also thank all the new members of the committee for being here today. I appreciate your willingness to contribute your time, expertise and insight to this important work. Turning now to the first agenda item, I will ask Megan to provide us with details of any apologies and substitutions. I think we've had a couple. Is that right?
Thank you, Chair. I have an apology today from Councillor Peter Lawrence and Councillor Jim Webber. Thank you.
Excellent. Okay. So the next item on the agenda is to agree the minutes of the Audit and Governance Committee from the meeting held on 28th of April 2026. Do members have any comments of accuracy they would like to raise? No? Are you all happy to agree? Can I ask members if they have any interests to declare on items on today's agenda, please? Any interest? No? I have one non-pecuniary interest in being a member of the Norfolk Pension Fund. Turn to item 4, updates from the Chair. I have one update for the committee today. The English Devolution and Community Empowerment Act 2026 received royal assent at the end of April. The Act puts the authority audit committees on a statutory basis and specifies that authorities must appoint at least one independent member. The regulations, which I understand are at an early stage, are expected to cover the definition of independent. The committee will be updated once the requirements have been clarified. Turning now to item 5, Risk Management Quarterly Report. Thomas, would you like to introduce the report?
Thank you, Chairman. Firstly, a very warm welcome to both new and returning members. Great to see you here. Before I go into summarising the reports, I'll just make a brief introduction. So I'm Thomas Osborne. I'm the Council's Organisational Risk Management Lead. So I work within Norfolk Audit Services, within the Finance Directorate. So I have 2 reports to summarise today. The first being the quarterly reports, and then I'll move on to the annual reports for risk management as well. So if I start with the quarterly report, just setting out the report itself, we bring a quarterly risk management report to this committee, and essentially it sets out the key changes to the corporate risks since the last report that's been brought here. It follows on from the Cabinet reporting, which is also on a quarterly basis. So hopefully that just provides some context to the report that I'm bringing to you today. So in summarising the quarterly report, I will refer to Appendix A on page 18 of your packs and just set out the key changes to the corporate risks that have been agreed by Cabinet earlier this month. So in terms of the key changes, we've got a risk closure to report. So effectively, risks can be closed for a number of reasons. Either the mitigations have been successfully implemented, or the window of risk has passed, or the environment of the risk has changed, whereby the core source of the risk has been removed. So there's one risk closure to report, which is RM001, and that's infrastructure funding requirements. And it's been closed on the basis that we have greater clarity on funding arrangements from central government over a longer period of time, and that removes the core source of uncertainty around annual funding. So that's the risk closure to report. We also have a score change, and with our risks at any level, they can move up or they can move down in score. Within Norfolk County Council, we operate on a 5x5 scoring matrix. So what that means is effectively we have both risk likelihood and risk impact being scored between 1 and 5, 1 being the lowest and 5 being the highest. So we've got one risk score change to report, which is RM33, the Norwich Western Link, and the current risk score has been lowered from 15 down to 10, and that's the likelihood that's been changed from 3 down to 2. And this is due to the Department for Transport confirming that the project remains on the Department for Transport's Major Road Network programme, with continued backing for the scheme from the Department for Transport. We also have, since reporting to Cabinet, a risk owner change to some of the corporate risks. So since reporting to Cabinet, there's been a change of Chief Executive. So therefore, risks RM006, RM050 and RM051, the risk owner has been updated to reflect the interim Chief Executive, Kat Hulat, as the interim risk owner for these risks. So that's a consequential change that's occurred since Cabinet reporting that I've also incorporated within this report. So I'll pause there to see if there are any questions on the quarterly reports before I move on to the annual report. Thank you.
Thank you very much for that, Thomas. Does the committee have any questions to ask at all? Councillor Mackie.
Yeah, thank you very much, Chairman, and really appreciate your kind words at the start of this meeting and continued support for me for the excellent officer team we have here leading on audit and our finance team as well. So should be an interesting 12 months at least looking at the risks which are presented in front of us. I've probably got about 2 or 3 questions to be fair, Thomas. As you said, the world has slightly changed with the Chief Executive departing, and it was under RM029, which is around the implications around having right skills and staff in place, and whether that, the departure of the CEO needs to be included under there, or certainly picked up as a significant loss to the authority. The second question I have, Chairman, is RM036, and it's talking about the net zero report and net zero activity, the commitment to 2030. I think my question is the Council still committed with the new administration to that target of net zero by 2030, given that if this register has been to the recent Cabinet meeting? And then my last question is more around RM051, which is the new councils coming together. Now, this has got a pretty low risk score, given that the new unitary authorities are vesting on the 1st of April 2028. And my question is, regarding the first mitigation to that risk is around working collaboratively with the district councils to carry out early work. Now, I'm aware by what people have said at full council that we're not participating in those member-led committees. So just wondering how we are working with the district councils to deliver this new unitary structure by the 1st of April. So they're the 3 questions really, Thomas. One is about picking up the Chief Executive's departure and the skills loss. Second one is regarding net zero, and the third one is around the new councils and that risk register about, possibly delivering 3 unitary authorities by the 1st of April. Thanks very much.
Would you like to answer, Thomas? Thanks.
Thank you. All very good questions, and thank you for raising them. So I'll take them in turn. So yes, you're right in saying that in the interim period between the publication and delivery of the cabinet reports, risk management reports, we've had a change of chief executive. So I will go back to the risk owner of RM29 to see how we incorporate the transition into the risk. If indeed we need to do so, we obviously have an interim chief executive that's come in, that's very able, and we will continue to obviously work forward whilst we appoint a permanent chief executive in the meantime. So on that point, I will take that point raised back to the risk owner and potentially look to incorporate that within the risk, but it's a valid point to note, and we'll see how it needs to be reflected within the risk. On the second point regarding RM36, I don't feel in a position to state whether the new administration is still committed to net zero by 2030. That's not a question that I can really answer myself, but I'm sure that there will be comments on that in due course. But again, one to note. And on the final point, in terms of RM51 and the Council's collaboration, we do have ongoing collaboration with the district councils, and wherever possible we are making those relationships with the district councils to be able to move forward with them. So again, that there is work going on in the background to move that forward and to develop the collaboration if indeed we are going forward with local government reorganisation as it currently stands. So again, hopefully that addresses the last point. Thank you.
Thank you, Thomas. Do you have any more questions? Councillor Mackie.
Yeah, thank you, Chairman. I don't want to be one of those annoying backseat drivers, the former sort of Prime Ministers who sit there shouting from the background. Thank you, Thomas, for those, and obviously some of those are in the political arena. That last question about things going on in the background, when will the authority, the officers may be able to advise us as well, look at, as we're tasked with governance, the whole governance structure around the move? When is something going to move together? How is it? I think a lot of members are quite in a fog at the moment in terms of what the governance arrangements are to moving to 3 unitary authorities. So any support on that would be great.
Again, it's probably one that the Director for Strategic Finance can pick up and answer more fully. Thank you.
Harvey, would you like to answer? Thank you.
Thank you. Thank you for the question. In terms of where we are with local government reorganisation, the government announced its minded to decision, as we know, back in March. Officers are working towards that, moving that forward, and a implementation board has been set up of officers from the county council and the district councils who are assessing the next steps in terms of working of how that the process of creating the 3 new unitaries will move forward. In terms of a legal position, the government is required and is planning to publish a structural change order, which will formally formalise the decision to abolish the county council and the 7 districts and replace it with the 3 new unitaries. The timetable for that is we are in the hands of government, but in the meantime, officers are working and planning as if that will come to pass. In due course, the shadow authorities will be elected, which will be in May 27 on the basis that the government's legislation carries through, and then we'll be in a stage of moving towards the vesting day of 1st of April 28. So although there may be political conversations around councillors being involved or not in the early stages of this process, officers are working as they're required to do to ensure that the council is best placed as it can be to implement the changes, but we are subject to the legal process. Hopefully that answers your question, Councillor. Thank you.
Yeah, thanks very much, Harvey. Thank you.
Thank you, Harvey. Do we have any more questions from the committee? Okay. Turning now to the recommendations, we have been asked to consider and agree the latest. A, key messages as per paragraphs 2.1 and 2.2 of this report. B, key changes to the corporate risk register, Appendix A. Corporate risk heat map, Appendix B. Corporate risks as at July 2026, Appendix C, and information in this report is sufficient. Those in favour of agreeing with recommendations, please indicate by show of hands. Those against? Any abstentions? I can confirm that the recommendations are agreed. So turning now to item 6, Annual Risk Management Report 2025 to 2026. Thomas, would you also like to introduce the report, please?
Thank you, Chairman. So I'll move on now to just summarising the Annual Risk Management Report. So to provide context to this report, this is an annual report. It comes each July to this committee, as well as the Cabinet. So effectively, this report sets out the annual view of the work of the risk management function. It looks back to the previous year, 25-26, but it's also forward-facing, looking to this year as well in terms of what we're set to deliver within the risk management function. You can find the Appendix A, which is the main body of the report, on page 70. And I'll just summarise some of the key areas of the report. So in terms of our risk management governance, we have, over the course of 25 and 26, continued with quarterly risk management reporting, both to this committee and also to Cabinet as well. And that has included to Cabinet the departmental risk summaries. So every 6 months, i.e. every other quarter, we will bring a summary of the departmental level risks, and that effectively just sets out what risks we face at the level below corporate level. And that gives members an oversight of the more granular risk level at departmental level across all of the departments. We've continued with the training of members and officers in risk management over the last year, and continue to do so, particularly with new members who have just come into post. So I've been busy with assisting members and officers alike in risk management training, so just setting out the formal basics of risk management that need to be understood in roles relating to risk management, and continued internal scrutiny and challenge of risks where appropriate to do so as well. So that's another element of my role that I've undertaken over the course of the last year, but also will continue into this year as well. So I'll pause there for any member questions. Thank you.
Thank you very much, Thomas, for putting that report together. Are there any questions from the committee? No? In that case, we will turn now to the recommendations. We have been asked to consider and agree these key messages from the Annual Risk Management 2025 to 2026 report contained within Appendix A. The overall opinion on the effectiveness of risk management for 2025-2026 is acceptable and therefore considered sound. Part 3 of the report. The risk management function complies with the Accounts and Audit England Regulations 2015, revised in 2020, and internal audit standards in the public sector. That the annual governance statement for 2025 to 2026 will refer to this report to support the evidence of effective risk management being in place. Those in favour of agreeing with recommendations, please indicate by show of hands. Thank you very much. Those against? Any abstentions? I can confirm that the recommendations are agreed. Turning now to item 7, external audits. Norfolk County Council and Norfolk Pension Fund Audit Planning Reports 2025 to 2026. We have Ernst & Young here today, who have also prepared a presentation. Would you like to introduce the report?
So we've got a number of reports for you today. So I think the order we were planning to take them in was we will present the audit plan for the council's audit first, and Dan will take you through that. Toby will then take you through the plan for the pension fund audit, and then I'll take you through the presentation in relation to our Reset for Recovery report. So I'll hand over to Dan now. Thank you.
Thank you, Debbie, and thank you, Chair. So yes, my name's Dan Cook. I'm the Senior Audit Manager on the External Audit for Norfolk County Council. So I'll take you through our audit planning report for Norfolk County Council 25-26. So this sets out to management and the audit committee how we're going to perform the audits for the 25-26 year of the financial statements and the council's value for money arrangements. So I'll take the report as read, but I will take you through the key highlights from the report. So the audit strategy overview section, which is on page 5 of our report, page 80 of the papers, covers a lot of work around the rebuilding of assurance. And as Debbie said, she's going to take you through a couple of reports after the audit plan for the Norfolk County Council audit and the Norfolk Pension Fund audit. So we'll come back to those shortly. Our audit risks for the audit of 25-26 are set out on pages 8 of our report and page 84 of the papers. These risks are very similar to the prior year, with a couple of minor changes relating to revenue recognition on the council subsidiaries, and a SIPFA code introduction of indexation for PPE asset valuations. Each of the risks are set out in a little bit more detail on page 13, page 89 of your papers if you want some more details around the risks. Our audit materiality is set out on page 10, page 86 of the papers, and materiality represents the values that we use as auditors to determine if transactions or balances are significant. So our performance materiality for 25-26, which is based on the draft statement of accounts, is set at 28.5 million for the single entity Norfolk County Council accounts, with a trivial threshold of 1.9 million. There are further details around materiality set out in section 4 of the report, which is page 26 or page 102 of your pack. Our value for money work is then set out in section 3 of the report, page 21, page 97 of your papers. So having completed our risk assessment around potential risks for value for money, we've identified one potential risk of significant weakness which we want to bring to the attention of the audit committee, and that's in relation to the council's governance arrangements relating to major infrastructure projects. We will report back with our findings as part of our audit results report, which we will bring at the end of the audit. We'd just like to say as well that this report also confirms that we are independent of the council, and the audit has started, and we are currently working our way through the audit procedures now. I would just like to report that we're working really well with the finance team, with Harvey and Jo and her team, and the audit is progressing very well as we speak. But happy to take any questions on the first report.
Any questions from the committee? Would you like to move on to the second report you would like to present? Sorry. Oh, I do apologise. Councillor Shibley-Sexton, would you like to ask a question?
Thank you, and thank you for the overview. I was wondering if you could elaborate more on the infrastructure risk, please.
So the council has a large number of capital projects, as most county councils would. Highways and infrastructure projects tend to be more complex and challenging than, for example, the construction of a building or an extension to a school or something like that. And that's because of the sort of additional planning complications there can be, the very high value of infrastructure schemes, and the fact that it requires input from maybe British Gas or other partners, etc., that need to be involved in that scheme. So because the council has got quite a large number of high value schemes related to that, we want to look at the governance arrangements and risk management arrangements related to those schemes in particular.
May I ask a follow-up?
Of course, yes.
What were your concerns about the governance in that where it wasn't robust enough?
We're not saying at this stage that we have got concerns. What we're saying is that because of the high value of the infrastructure schemes that the council has, that is a potential area of weakness, and therefore we want to do some more work to get a better understanding of the governance arrangements around that. And when we do our final reporting in our audit results report, we report back to you on the conclusion from that work.
Thank you very much. Would you like to move on to the second part of your report, please? Thank you.
Yes, thank you, Chair. My name is Oluwatobi Adedeji. I'm the audit manager on the Norfolk Pension Fund, and we present our 25-26 provisional audit plan for Norfolk Pension Fund for the year ended 31st March 2026, which is taken as read. So I will just draw out a few key points. I will not go through all the report, but then I'm happy to take questions afterwards. So page 6 of our report, which is on page 145 of your pack, sets out our risk assessment. And you will notice that this remained largely similar to that of prior year. So you can find further details about the risk assessment on page 9 to 11 of our report, which is also page 148 to 150 of your pack. So page 7 of our report and then page 146 of the paper set out the materiality basis and the materiality levels, which have been set based on the prior year final financial statements. However, we have updated the materiality levels upon receiving the 25-26 draft financial statements of Norfolk Pension Fund. So the updated materiality figures are, for the planning materiality, it is 59 million now, with a performance materiality of 44.8 million and audit difference of 2.9 million. And on page 22 of our report and page 161 of your paper set out our independence consideration, and we do not have any independence concern at the moment. Thank you. So, and I would also like to say that the audit is progressing well. We are working very well with the finance team, and they've been supporting us. So I would like to stop there now and take any questions from anyone. Thank you.
Any questions from the committee? Councillor Mackie.
Is this on Appendix A, the EY report? Are we able to ask questions at this point? We've got, on this paper, we've got to recommend or agree Appendix A and B. I'm looking at the EY report.
On B.
B, are we? Right, I've got Appendix A is the EY report. Am I able to comment on that at the moment?
They're both the Ernst & Young reports. So Appendix A was the Norfolk County Council,
Yes.
and Appendix B is the Norfolk Pension Fund.
Pension fund. Okay, I'll talk about. I've got a question on A and then B then. So the first question I've got, was really more of a statement, is on page 81. It talks about the recovery depending heavily on the council's own teams here. Now, what I slightly take issue with, now I'm out of the hot seat, is around that the council has got a lot of work to do in terms of the recovery. I can't see anywhere in here any onus on Ernst & Young to do their heavy lifting, because when I've sat up there as chair, the last 2, 3, 4 years have not been dependent on the finance team here but giving you the right information. It's been the capacity of Ernst & Young in order to deliver our report. So I do take umbrage, and I won't be able to support this, Chairman, is that it is saying that there is quite a lot of criticism, really, implied or otherwise, regarding the information coming from our officers, what I don't think is justified. I don't think we are part of a recovery, but a recovery not of our making. Then there is page 218. We go to the other extreme where it starts benchmarking Norfolk against other local authorities, but there's no indication in those bar graphs who those other local authorities are, and I would really like that information as well, because are we measuring eggs with eggs or eggs with apples? So they're my 2 points. One, you know, this level of critique, I do feel as though the local authority has been slightly gaslit in terms of our ability to respond in an orderly way. And my last question, so there's 2 points there, or statements, is, you know, what is Ernst & Young's level of assurance that 25-26 annual accounts will be delivered to this chair and this committee on time, and readiness for us to have an unqualified set of accounts, which we haven't had for the last few years. Thank you.
Okay. If I can take all of those points, probably sit best in the next presentation that we're going to take you through, if that's okay. So I can hopefully pick up those points in terms of that commentary and the other questions that you raised.
Are you happy to proceed with that,
Yeah,
Councillor
well,
Mackie?
hold that thought for the presentation then, Chairman. Thank you.
Okay. Thank you, Debbie. Would you like to continue, please?
Thank you. So I think we'll bring up the presentation now. Hopefully Dan will be able to do that for me. So we'll give 2 seconds for that to come up. So I think within your pack you should have the full detailed report, but what we thought would be helpful is we've pulled together a presentation, which is obviously in your pack as well. So that's what I would like to take you through, and that is now up there. So if I just give some background before I actually start to take you through the report. So the next slide, please, Dan. Just in terms of what we're planning to cover. Thank you. So in terms of this, what we want to do is we've drawn together some observations from the work that we've been undertaking across the local government sector for a number of years now, and we've pulled out some of the themes that we've brought together in our more detailed report from Reset to Recovery, which I don't know if you've had a chance to read, but it's hopefully a useful and interesting read. What it tries to look at is what's happened during the local audit reset phase, which is what we've been through in the last couple of years, and what we've learned as EY from auditing over 100 public sector bodies. And perhaps most importantly, what we're now focusing on is the next phase, and saying what recovery starts to look like and what we all need to do. And I do accept that point, that it's everybody that needs to do that to actually achieve the recovery that we all want to. In many ways, we've solved part of the problem, which is the backlog. So that has largely gone, as you'll see through some of the slides in the pack. The challenge is now how we rebuild confidence and assurance for the sector, and in terms of your financial statements in particular. So what we want to do is give you some context about the reset, and particularly I know there's a number of new members on this committee, so hopefully that will be helpful to you as well. And look at basically some of the key messages that we've been trying to report over the last couple of years in terms of clearing the backlog, starting to use the backstop dates, etc. And you'll obviously get further reporting on that in our audit results report, which we will bring to you once we've concluded the audit in advance of the backstop date, which this year is the end of January 2027. We'll also provide some benchmarking in terms of where Norfolk County Council sits against many other local authorities, but also county councils in particular, and then some of the recommendations for this committee in terms of what your role is in terms of that recovery process. So if we can move on to the next slide. So I think this comes back to Councillor Mackey's point that local government audits started to fail a number of years ago, and there was a tendency to look for a single cause, and that single cause was often blame the auditors. I think that when that was looked at in more detail, it's quite clear that there was many factors leading to the kind of position that everybody got into, and sort of a perfect storm of conditions that came together that meant we got into the position where we got to, with many audits not being signed for a number of years. The system has become more complex, and we've set out 3 things there. So we've got the structural break, which is lack of a system leader. There was the Audit Commission was abolished. There was no natural leader for the system, and therefore trying to get any sort of changes through to accounts, etc., was proved very, very difficult. There was complexity of the accounting standards that applied. So public sector accounting is IFRS compliant, which is very technical accounting, but in addition to that, there's an additional layer of complexity that's applied for local government. So local government accounts are incredibly complex. We actually find that whenever some of our corporate colleagues come and work on our local government audits, they're amazed at the complexity of local government accounts. So I think that's a system issue that has an impact as well. There was then also a challenge in terms of fragility of capacity within the sector, and that's both within finance teams in local authorities and also within audit teams as well. There was an issue with attractiveness of the profession and the ability to recruit and retrain and retain appropriate people, as I said, both in terms of finance teams and also in the audit sector as well. And then finally, the financial reporting system. As I've noted, local authority accounts are very complex. There's also tension from what the regulators require auditors to do versus what actually the interests of a stakeholder if local government accounts have in those accounts. So recovery therefore is not going to come from one single solution or one single intervention, and it will take the finance team and auditors working together to actually achieve the recovery that we all want to. If I can then move on to the next slide. So here, what this slide shows is that the reset has achieved its objectives of improving timeliness. So at the bottom you can see there the number of unmodified, qualified and disclaimed backstop opinions, and quite a small number of unsigned opinions. So step 1 has been achieved. We've actually moved the objective of improving timeliness, and backlogs have largely been cleared. But we shouldn't mistake issue of opinions for actually providing assurance on financial statements. As you'll note from there, that there's quite a small number of unmodified opinions, with the majority of those being on pension funds, which we gave particular focus to. So a qualified or a disclaimed opinion does not give the level of assurance that a reader of those financial statements would expect to receive from an opinion. So that's what we need to now move to unmodified opinions. So the key question now is how quickly we can start to rebuild that assurance. So if we can move to the next slide. So hopefully those of you that have been on the committee before will have seen this slide previously. So this is an extract from what is called the LARIG, which was issued by the NAO, which sets out this sort of expected time frame of moving from a disclaimed opinion to an unqualified opinion. So the steps in that process are normally moving from a disclaimer to a qualified, and then a further qualified opinion, and then an unqualified opinion after that. We've included on this slide where Norfolk County Council sits, and currently you are slightly behind where we would expect local authorities to be, and again that will come through in later slides. And that's because we've got some greater gaps in assurance than we have maybe in some other clients, and we can come on to talk about that in more detail. So the problem is with the disclaimer opinion that if you have assurance gaps, they roll forward into the following year. So for example, if we didn't have assurance over your PPE balance at the 31st of March 2024, that means we don't have any assurance over the opening balance for 2025. And we don't have any assurance over consequential movements in the CIS, for example, in relation to that. So once we've issued a disclaimer, it takes some years to build back that assurance. Some of that will be natural build back from doing our normal audit procedures. Some of that will be specific additional procedures that we will need to undertake, and we are now starting to look at those additional procedures to start to rebuild that assurance picture. So recovery is complex. we have assessed the, sorry Dan, we have assessed you against kind of the NAO guidance, but many councils are not exactly in line with the NAO sort of potential timetable. So it is complex, it is different for each individual body, which is what makes it all the more challenging. There isn't one size fits all, and everybody's in a different position. So we now can move on to the next one. Thanks, Dan. If my slide will move on. So one thing we've tried to do here is move beyond simply looking at audit opinions and look at actually where assurance has actually been rebuilt. So we've set out colour coding there in terms of where we've got no assurance, partial assurance and substantial assurance in terms of the sort of areas of the accounts that are covered. So as you can see, for police and fire, we've probably got greater levels of assurance. That's probably because some of those accounts are less complex, and in particular, PCCs don't have PPE, which is one of the areas where we've got particular gaps in assurance. But you can see that county councils, unitaries, London boroughs and unitaries are probably in the worst position in terms of overall level of assurance, and then counties and districts are a slightly better position in terms of that. So it's quite uneven. So what we've tried to look at in a report is saying what is actually driving those differences in those different types of bodies. Gaps in reserves is consistent across every single client that we have, but we also have property, plant and equipment, and in some cases income and expenditure balances where we have gaps in assurance. And that's pretty much where you sit as Norfolk County Council, that our gaps are largely in reserves, PPE, some of the income and expenditure balances, and also capital grants received in advance, which is why you're probably slightly behind where others are. So we can move to the next slide. What we wanted to do a little bit more detail is just talk about the reserves point, because that is the point that's common across every single body. That's where we have the main gap in assurance in relation to reserves. So usable and unusable reserves are one of the layers of additional complexity that we have in local government accounting, because the unusable reserves are in effect accounting adjustment balances, but they will flow from the transactions that are made each year. So if we have, for example, as we had in your case, one gap year where we don't do any audit procedures and we had a full disclaimer opinion, that means we don't have any assurance over the movements that went into those different reserve balances. So that's the key difficulty about how we rebuild that assurance when we didn't do any audit work over any transactions in those financial years. We'll also have potentially other gaps where we've got other balances that we couldn't audit that would flow through to those reserves balances. Usable reserves are probably the key balance within the financial statements, because they actually are probably easiest to understand as well. So the level of usable reserves is essentially the build-up of balances from prior years, and it's the money that the council is able to set aside to respond to future pressure. So your general fund balance, your earmark reserves, your capital receipts reserve are the key reserves that Section 151 officer will look at when setting the budget, when determining the levels of council tax that need to be levied, etc. So that's really key in terms of how we get the assurance back over those reserves balances. There is a movement in reserve statement within the financial statements, which sets out the opening balances, the income and expenditure movements in the year, and then also any statutory or voluntary transfers between reserves that occur in those years as well. So as I said, that's really the key challenge that we've got around how we rebuild that assurance for the years where we didn't undertake procedures on the transactions that flow into those reserves balances. So then if we move on to the next one, within our audit results report for every single audited body we have, we include a table where we effectively give a scorecard for how the audit went and how the finance team supported the audit, and preparedness therefore for the audit as well. Historically, the timeliness of the financial statements was also always a difficulty, but we can see there that the timeliness of the draft financial statements generally effective across most councils now. So that's a really positive position, that has a step forward change that's occurred in the last couple of years. We then also found that where our strongest finding, I think, was that the organisations making the fastest progress to recovery and to rebuilding assurance are those not necessarily the largest bodies or the least complex, but the ones that were best prepared for the financial statements audit, with good accounts, strong working papers, and timely and efficient responses to audit queries. So that audit readiness indicator is absolutely key as an indicator for rebuilding assurance. So you will have seen a chart of that similar nature in our audit results report and our auditor's annual report last year, which assessed the council's readiness and preparedness to support the audit. But I think it also highlights that the accounts process is not just a year-end process. The financial governance that works more widely throughout the year is really important in supporting the whole audit process as well. So if we can move on to the next one. So this shows where Norfolk County Council sits based on our assessments of those factors. So you can see that you're in quartile 2, and that basically says, you know, arrangements were effective across a number of areas, but there were also improvements required in some areas as well. Again, looking at how that links to rebuild of assurance, the quartile 1 bodies were the ones that were more likely to be a qualified opinion rather than disclaimed, and more likely to be moving to qualified this year if they hadn't already. The quarter 4 ones, interestingly, were 10 times more likely to have value for money findings than those in quartile 1. So I think those arrangements to support the financial statements and internal control arrangements are really key in terms of the rebuild process, but also more widely important in terms of the council's overall governance and internal control framework. We can move to the next slide. So again, this is another example we've just done of how you compare to your peers. So this is specifically comparing to county councils. As you can see, you are probably got more areas where we need improvements. And I think that goes back to the fact that, as I've already noted, there's areas such as infrastructure assets, capital grants received in advance where we could not get full assurance over the last couple of years. And therefore, those are areas that we've highlighted as needing some improvement in arrangements to enable supporting an effective audit of those balances. So that's where you sit compared to county councils. Then on the next one, again, we've done a further assessment, which is basically just a change in assurance summary. So I think what's interesting to note on the right-hand table there is our assurance that we had in 23-24 and 24-25 was largely the same. So we didn't manage to sort of plug the gaps that we had in 23-24 last year. So very much our focus for 25-26, so the current year audit, is ensuring that we can actually get full assurance over the balance sheet this year and plug those gaps where we weren't able to complete the audit of those balances. So again, infrastructure, payroll, capital grants received in advance. The reserves, as I said, is a more challenging position. And again, the chart on the left shows that we had 10 of our significant accounts where we could get full assurance, but there were 6 in total where we couldn't get any assurance or only had partial assurance. And obviously we're looking to increase that green number and reduce the 2 3s in the red and the amber. So this is the final slide of the presentation, which really just brings this back to kind of what is your role as the Audit and Governance Committee. I think the peer comparison is useful, but it's only useful if it actually leads to action and improvement in terms of the position that we're able to report for 25-26. So what we need to do is we need to turn those assurance gap into a live governance agenda, not just a year-end audit issue, to make sure that arrangements are in place throughout the year to ensure that those gaps can be plugged and we can start to rebuild the assurance and move to an unmodified opinion. So in terms of like timeliness, as I've said, we think there isn't an issue to focus on that. And to be honest, for Norfolk County Council, I don't think we've ever had an issue with timeliness of the production of the financial statements, but it's around clearing the backlog. So I think in terms of members of the Audit and Governance Committee, you can play a real role in driving that forward. So I think the key things for you to think about is, do you understand where you do have assurance? Do you understand where the gaps are? And are those gaps reducing? And do you understand what's being done by both the finance team and ourselves as the audit team to address those gaps? So I recognise there's a lot of information in there. It is, as I said, a very challenging and complicated area. I've been in local government audit for around 30 years now, and we've never been in a position where we've issued disclaimer opinions and then need to do work to rebuild and plug those gaps in assurance that come from those disclaimers. But we are working through that, I would say, very proactively with the council. The audit so far is going very well, and we're hoping that we'll plug some of those assurance gaps this year, but we won't be in a position to issue an unmodified opinion for a number of years yet, because it takes time for that to wash through in terms of the consequential impacts of those gaps. But I'm very happy to take any comments or questions on this or any of the other reports.
Thank you very much, Debbie, for that very comprehensive report you've just given. Do we have any questions from the committee? No. Are there any more elements of your report you'd like to go through?
No, thank you, Chair. I think that's everything.
Thank you, Debbie. Okay. Turning now to the recommendations, we have been asked to consider and agree the Norfolk County Council Audit Plan Report 2025 to 2026 and the Norfolk Pension Fund Audit Plan Report 2025 to 2026, and consider and note the supporting report and briefing. Those in favour of agreeing with recommendations, please indicate by show of hands. Those against? Any abstentions? I can confirm that the recommendations are agreed. Turning now to item 8, Information Governance Annual Report 2025 to 2026. Nigel, would you like to introduce the report, please?
Lovely, thank you, Chairman. So Nigel Gollop, Head of Information Governance. So just to put a bit of context around that, so responsibility for managing compliments and complaints and also information management, specifically focusing around data protection. So I'm going to talk through the Information Governance Annual Report 2025-2026. The purpose of this report is around providing an annual assurance statement to confirm that some of the key roles that we've got here in the Council around information have been effectively discharged. So the key roles we're talking about are the Data Protection Officer, which is a statutory role that we have as an organisation, the Senior Information Risk Officer, and also the Caldecott Guardian. So some really key roles in terms of how we manage information. So I will talk through in terms of some of the key actions that have happened over the last year that help support the position that those roles have been effectively discharged. So we continue to have the Information Governance Steering Group on a bi-monthly basis, so that brings together the key stakeholders with accountability for information to discuss the various issues that we have. That, as I say, continues to happen and meets on a bi-monthly basis. We have achieved mandatory training compliance of over 95%, so this is around information governance and online security. Extremely important for a number of reasons, to make sure that all of our officers are trained, and this allows us to have access to data to allow us to continue to provide the services that we deliver as an organisation. I think it's worth mentioning, so you will see in here we have seen quite a significant increase in subject access requests, complaints and FOI, so freedom of information requests, up to a kind of a 55% increase in the last year on subject access requests and between 15 and 20% on the others. This is something that we are, we're working hard to ensure that we deliver these within our statutory timescales. You can see within the report where we have achieved this year. This is a challenge, and I think it's something that this committee needs to be aware of in terms of the increasing volumes that we are seeing in that space. We are doing, plenty of work to understand the processes, make sure that they are as efficient as they can be, and clearly technology as well. So where we're able to use that to drive efficiency and, ensure that our responses remain within statutory timescales. But it is something worth us as a committee being aware of. So we have had an electronic storage programme has been ongoing since 2021, I believe, so that has just come to a close. This is a very large-scale migration of electronic files from the old network storage that we had onto a SharePoint system. We've migrated over 39 million files and trained over 4,000 colleagues in terms of the use of that. So it's been extremely successful. And we are now very much in a kind of a BAU space of that, in terms of that is our ongoing management of electronic information, where we've implemented things such as retention labels, so it allows for much more automatic management of information that we have there. And I think it's kind of worth pointing out that that's something that has been, it's kind of unprecedented across other organisations as well. We've kind of become that go-to organisation to come to have those conversations, because it's a big challenge. It's one that, you know, has taken a lot of hard work, but absolutely worthwhile in terms of what it's delivered. I think it's worth pointing out as well that we continue to have positive engagement with other organisations, so particularly around the police and the CPS. So we do a lot of work with them in terms of information that we hold that helps assist them in terms of the investigations that they are undertaking. And we have seen some, you know, good successes there in terms of the information that we have shared with those organisations. So I think this statement that you'll see in here is saying that we have, you know, conducted appropriate inquiries to ensure that we have fulfilled our accountabilities in terms of information management. We are continuing to make progress, and there are some key measures that we do track, which have been included in the report as well. In terms of future deliverables, so we will continue to make sure that we monitor what is going on in a macro environment, so regulatory changes which we see, and also you know, things that will impact the volumes that we are seeing, which I kind of have mentioned is seen some significant increases. And the other thing that we are very much continuing to look at, and we always have done, is around how do we use technology to ensure that we're being as efficient, as effective as possible. So I think that covers everything that I want to highlight from the report, so I'm happy to take any questions.
Thank you very much for that, Nigel. Do we have any questions? Councillor Shipley-Sexton.
Thank you. It's a small thing. I just noticed on your when you're talking about materials and material changes, you guys have changed the Teams chat from 30 days till 7, and I wondered if you'd consider the risk that people might download more information to their own personal laptops if they're using their personal laptops, their work laptops, which will then be left in storage for longer because they don't want to lose it if it's gone in 7 days versus the 30, and that could create more risk.
Absolutely, you're right. So there is a risk in terms of that. I think for us, it was around making sure that as an organisation, so best practice is 7 days. So the Information Commissioner's Office, that is their standard. I think it's being really clear, and what we've been really clear about, chat is for those instant communications. Anything that needs to be kept longer should be kept in an appropriate place for the appropriate amount of time. So whether it's 30 days or 7 days, those conversations are they are those instant conversations. So yeah, absolutely, we need to make sure that if anything is being saved from there, because it might happen, you're absolutely right, but is then put in for the appropriate place and the appropriate retention.
Thank you. Any more questions? Councillor Mackie.
Yeah, thank you, Chairman, and thanks very much, Nigel. Really comprehensive report. And we've had reports here before on a level of assurance regarding our data security handling and all the other elements which go into, you know, really robust mechanisms for data handling. Under other implications, it's got impact of local government reorganisation. But I'm just mindful, and it's not non-applicable, but I'm just minded of going back to the earlier comments about governance and structures, and you know, we've now got 50-odd years worth of really critical data on individuals, those who've gone for adoption and safeguarding and all of those stuff. Any thoughts yet about how that may be disaggregated or stay with a single point, even though we move to 3 unitary authorities?
So early conversations, I would suggest. So you're absolutely right. It's going to be a challenge, I think, to disaggregate some of the information that we hold. We're going to have to look at the options of that in terms of how that could work and how the new organisations want that to work as well. But it's certainly going to be a challenge that we're going to need to address.
I think that's all the questions, unless anybody else would like to add anything. No? Okay. In that case, we will now turn to the recommendations. We have been asked to consider the Information Governance Annual Statement and agree that the SIRO, DPO and Caldecott Guardians roles have ensured that there are adequate systems and processes in place around information governance, and agree that the responsibilities held by the SIRO, DPO and Caldecott Guardians have been effectively discharged. Those in favour of agreeing with recommendations, please show your hands. Those against? Any abstentions? I can confirm that the recommendations are agreed. Turning now to item 9, the Anti-Fraud, Corruption, Whistleblowing Annual Report. Adrian, would you like to introduce the report, please?
Excuse me. Thank you very much, Chairman. Yes. So I'm presenting this report today. The responsible director is Director of Legal Services and it says Monitoring Officer. I think there's been changes obviously recently, so this report was working through to this committee there. So this report, Anti-Fraud and Corruption, is another annual report, and this supports the annual governance statement and gives you a roundup of the activity that's taken place over the year. We do bring quarterly reports when we can to the Audit Committee on activity that's been taking place. I'm reporting today our investigative organisational lead for counter fraud and corruption can't be here today, but I'm happy to present the report on his behalf. I'm really pleased with the work that we've been doing on anti-fraud, corruption and whistleblowing. These are important areas that need covering, and our response is we have a team of 2. There's the Andy Reeve that I was mentioning, and he has a support officer who's helping him now. That's something that's happened during the year. And the work that they do can be proactive in terms of trying to prevent fraud through things like training, looking at systems, giving advice and so forth, and reactive in terms of if a fraud allegation has been identified or has been referred to us, perhaps through whistleblowing or other management communications. That we do react to that, and then if there are issues with irregularities or potential fraud, then they will be investigated by the appropriate officers, be they safeguarding or if it's financial, then that's something that my team would take forward. So we do work with that. So all of that leads through into demonstrating the Council's commitment to transparency, accountability and high standards of ethical conduct, and preventing, identifying and responding to fraud and corruption where it's found. So it remains a key priority. I'm really pleased to present this report to you today, which sets out the activity that's taken place. One thing in particular, if I can mention, we've got some, in terms of proactive work, there is the work that we do with the National Fraud Initiative. So that works and matches data, different data sets. That helps with blue badge prevention, prevention of misuse of blue badges. So if somebody has sadly passed away, but their badge is still in circulation, I think that's something that was perhaps in the media recently. And so that's something that the National Fraud Initiative work that we engage with helps avoid that in the first place, because if we can pick up and see where blue badges aren't appropriate anymore, aren't needed, and therefore they can, the relevant service can take action with that and write out to them and say, you know, can we have the badge back, and so forth. The other end of it is the identification, where perhaps if it's being used out on the roads and it's spotted, and then it's reported, and then action is taken because it's actually being used when it shouldn't be. So they work together, so we have a sort of a joined up arrangement. Another part to that was on page 232, where we work with districts in terms of the Norfolk Fraud Hub, and the arrangement there is similar to or works through the same system as the National Fraud Initiative of matching data and so forth, but we have a local arrangement, and that has led to significant savings in terms of single person discount and the LCTRS, and I did have this at the time. So if 232, if I go there, so that is picking up on the council tax arrangements, so that's there in the report. So we continue to have whistleblowing referrals, which is good because it shows that there is trust and knowledge of the whistleblowing policy and the process. We have a report concerns mailbox for people to make concerns, or they can contact a number of officers in terms of the policy gives details of contacts. So we'd had 41 referrals, disclosures that were made to my team in the last year. It was 42 the year before, so it's quite a sustained level of referrals that are made, and then we take those forward in terms of investigating them. If it's safeguarding and so forth, we pass that over to the relevant officers for that to be done, because they're specialists in that work. So we'll either make referrals to other officers as appropriate, or we will look into them ourselves. Sometimes we'll find that it's not actually something to do with the council, in which case we could pass them on to, if it's a district council or something like that, we can pass them on to the right place so that that can be looked into there. I'd just like to commend this report to you, but I'm very grateful for the hard work that the officers do in terms of these investigations. They can last a long time. We do make referrals to the police where it's appropriate, and you might well be aware that the current sort of system takes a long time to go through in terms of perhaps police prioritising cases and so forth. That takes time, but also then cases getting into court and going through Crown Prosecution Service, getting a place in court, it takes a long time. So we've got cases here which you will see that they are running through, but that's something that we don't have any control over that. But we do the best we can to give them a good report with evidence and statements and so forth. Happy to take any questions. Thank you, Chair.
Thank you very much, Adrian, for putting together and presenting the report. Any questions from the committee? Councillor Mackie.
Yeah, thank you, Chairman, and very much echo your sentiment and thanks for this particular paper. Andy and the team have been doing an amazing job over a number of years now to put whistleblowing, fraud, error and etc. at the forefront of what the council does with its sort of zero tolerance policy. And I think with the training which has been rolled out, has been exceptionally well received and embedded into the organisation. And I think it sort of shows itself here in terms of the reach which that work has had. My questions are on, as Adrian mentioned there, about other third parties who we have a sort of dotted line to, and often the responsibility ends back here at County Hall, in particularly schools. Andy had, unfortunate success in inverted commas, with quite a high-profile fraud case last year regarding schools, and whether they can still recommend things are investigated by the county council on their behalf. I know we have a sort of traded sort of fund with them where they're able to call on our services, whether schools are able to reach out for if there's concerns about fraud and error and whistleblowing. And then the second question is, where are we? It's 2.10, which is around the NFI. Although no fraud has been identified, having highlighted areas of other review in the council. And the first one is around, well, they're both interconnected, the conflicts of interest and secondary employment. A lot of people are doing two or more jobs. It's whether, it's inadvertent or direct conflict of interest. I know as members we have to declare, everything. Is whether members of staff are having to do the similar sort of activity. If you're working on adult social care and then you're working in the adult social care as a director of a care company, those levels of conflict of interest, how are they recorded and how will they be taken forward? Thanks so much, Chairman.
Thank you very much. So if I take each of those questions, yes, we do have referrals from local authority maintained schools. Academies would tend to make their own arrangements and in terms of that, but for local authority maintained schools, They are part of the County Council in terms of financial matters. They're part of the accounting. So my director, Harvey Bullen, has a duty to make sure that there are appropriate controls in schools, local authority maintained schools as well. So we have an interest in that and making sure that if there are irregularities or frauds that they are looked into. So we do get time to time referrals through from schools. Some can be more serious than others. What we do, we will be, my team will be able to work through with the school and we have access to the sort of the financial systems that the schools use. They tend to use a system called STAR. They all should be abiding by, and they sign up to the Norfolk scheme for financing schools. So we know what the expectations are, but there are also national regulations in terms of how schools are meant to be run, and school governor duties and head teachers' duties in terms of that. Yes, we can and do take on work with that, and we make sure that we do all we can to recover the funds. So if the school has lost any funds, to recover that either through the insurance, if that is necessary, but also through taking action through recovery of funds through court as well, if that's appropriate. So we've had successes in that area. The other point in terms of, I think there was a question about the National Fraud Initiative in terms of the work there. So I think the report sets out where there's been savings. So I wasn't particularly clear on the question. Sorry.
Yeah, sorry, Adrian. It's 2.10. It talks about the new work to investigate conflict of interest and secondary jobs. I just wonder what the processes were. Probably via HR, line managers' responsibility about collecting and collating this, or members, staff members having to declare an interest on secondary jobs.
Thank you. Yes, sorry, I see the point there. Yes, so once again, this question of sort of National Fraud Initiative doing the matching and finding some cases, which is good, so that will take sort of details of where somebody's on the payroll here, but also maybe where they're a supplier, or where they're to outside data as to where other things are going on, if they've got something recorded elsewhere. So it can report back to us a match to say, did we know that this person is also logged for perhaps another job, another role, that they're working, they're registered in two places for national insurance and for tax, for example. So the system can find those as a match, but the council has internal controls and arrangements in terms of that conflicts of interest should be declared. That's part of the council's standards of conduct and behaviour and public sector values in terms of being transparent and honest as to what's happening. So there, as you've said, there are members' declarations of interest. There are also officer declarations of interest, and so that is meant to be if an officer finds they have a conflict of interest, they should report that to their head of service. So the work that we've been doing on that area and looking to do is to see where that can be sort of more organised in terms of IT, in terms of how that's captured and work together, rather than it being localised, if you like, in terms of an area, so that it helps us get a bigger, better, wider picture of where there might be conflicts and what's happening, and also to follow up with them before things are sort of matched, to see what mitigation and controls are in place. How is that working? Is it appropriate? So that there are areas that we can strengthen, but we do have a system where that's recorded. So hopefully if that helps.
Thank you, Adrian. Any more questions from the committee? Okay, turning now to the recommendations. We have been asked to consider and agree the key messages featured in this report, that the work and assurance meet requirements, and advise if further information is required. Those in favour of agreeing with the recommendation, please indicate by show of hands. I can confirm that the recommendations are agreed. Turning now to item 10, Norfolk Audit Services Annual Report 2025 to 2026 and Quarterly Report for period ending 30th of June 2026. Adrian, that's you again. Would you like to introduce the report, please?
Thank you, Chairman. Yes. This is our annual report. Once again, we do bring quarterly reports to the committee, but this is an annual and a quarterly report. So it covers 25-26 year and quarter one of the current year. They're looking at point 2.10 on page 241. One of the key messages is that from the work completed in the 25-26 year, there were 17 audits, opinion audits that were completed, 3 Norfolk Pension Fund audits. My team provides a traded service to the Norfolk Pension Fund, so we will do internal audits for them, and that helps support their work when they're being audited by the external auditors from the plan that you saw earlier in the meeting. There were 8 school audits of local authority maintained schools, along with 2 thematic audits that were performed, and there were 12 grant certifications. So the council gets lots of money from various sources, mainly the government, and those grants need certification to say that yes, they've been spent properly as they should be. We provide that certification back to the funding department, be it sort of Department of Transport, so they will look for they put that in their rules as to say, right, we're giving you this money. You then need to annually certify that it's been spent properly. We will send that certification up. It's something that I would sign with the chief executive to report back. And then that helps the Department of Transport fulfil their responsibility when they are audited by the National Audit Office. They will look to see that the millions and millions of pounds that they've dispersed from government funds has been used appropriately, so they will expect that department to have a full set of certifications filled in and completed locally. So it all builds up as an assurance pyramid, if you like, as to what's there. So in that sense, they are really important, because as all the grant conditions, I'm very much aware the grant conditions say if they don't get that certificate, they can ask for it back. So that's the last thing the council wants, to have them to ask for money that's for roads or potholes or whatever. So we want to keep it. So it's a really important exercise. It's something that's happening in the background, but it is important and key to have that audit trail and have that assurance for the government. So that's that's a sort of a high-level summary of the work that's been doing. We have been we in terms of the year before, there was some difficulties with staff turnover, and we didn't get as many audits completed as we'd wanted to. We're building that back up. So I'm pleased to say that we had the 17 opinion audits, which was sufficient for me to draw an opinion to provide for my Director of Strategic Finance in terms of the opinion. So those are the final audits. There were also 4 that were draft, so I had that detail from the work that was there in terms of that, as well as the other information that was coming in from the work on the annual governance statement, from the certifications of the grants. They're all different uses of money and arrangements that are going through the local controls. So taken together, that was providing me with reasonable assurance as to the controls. There is a table on page 242. It sets out their breakdown of those 17 audits over some different sort of categories. And those are the categories that provide overall a reasonable assurance across a organisation, the County Council, that is so broad and has different sort of features of what are going on. So things like how's corporate governance looking, financial control, commissioning and procurement, change management, asset management, and information and technology. So if you have work that's taking place on each of those, that does give you a position to have reasonable assurance of how things are working and the control. And that can lead into then the annual opinion across the whole council on the arrangements for internal control, which is maintained as acceptable. So I'm really pleased to say that. And I think a key point in that is that that's something that the external auditors would look at. They were talking about their value for money opinion and whether or not there are controls and so forth. So they look at the work that we are doing, the coverage that internal audit is doing. They mentioned in their plan about improving the local audit. Part of that was about the internal controls and governance, including internal audit. So they are keeping an eye on us, and they're watchful of the coverage that we do, and then the outcomes and the findings that we have, and of us following up on those recommendations that have been made. So we work quite closely with Ernst & Young in that sense, that they look and audit what we do as well. So I think the report is quite long, goes off into different areas, but that's part of the fact that my team does deal with lots of different areas. But I'd be happy to answer any questions. Thank you very much.
Thank you very much, Adrian. Are there any questions from the committee? Okay, and we will move to the recommendations. We have been asked to agree the opinion on the overall adequacy and effectiveness of the County Council's framework for risk management, governance and control 2025 to 2026, and for the quarter ending 30th of June 2026 is acceptable. Number 2, satisfactory progress has been made with the audit strategy that was set out in the report to committee on 29th of April 2025. Number 3, the audit service provided by NAS continues to adapt and confirm with the new Global Internal Audit Standards, GIAS, and UK Public Sector Application Note, and complies with the Accounts and Audit Regulations 2015. Number 4, the draft annual governance statement 2025 to 2026 for Norfolk County Council refers to this report. And number 5, that the committee continue to review information on the effectiveness of the management process and corporate control functions, legal, financial, information, health and safety and human resources services performed as provided by internal audits, self-assessment, customer feedback and any existing external performance reviews. Those in favour of agreeing with recommendations, please indicate by a show of hands. I can confirm the recommendations are agreed. And so we will turn to item 11, Norfolk Audit Services Terms of Reference Charter and Code of Ethics. Adrian, would you like to introduce the report?
Thank you very much, Chairman. Yes, so just to explain to the committee, so this report introduces the terms of reference, or charter as it's sometimes called, for the Norfolk Audit Services, the Council's internal audit team. It's how we arrange our work and meet the appropriate standards and so forth. It did come to the committee recently, but the purpose of bringing it today is that there are, in terms of auditing standards, it was clear that the work that the Norfolk Audit Services do in collating the annual governance statement is something that the auditing standards that auditors need to abide by needs to have a consideration to that in terms of when auditors are helping out with non-audit work. It's the ability then to the independence to be able to, who's reporting on the work that is being done there as it's the auditors that are doing it. So there are benefits in the auditors doing some work, for example, with having risk in the team and anti-fraud and corruption, as you'll see. So we do have a variety of work that is undertaken within the team, but we do have controls and safety arrangements for that, so that their independence can be clear. So In terms of this charter, if I can ask you, direct you to page 269, which is Appendix A to the report. So it mentions at 1.2 that the purpose of the charter is to champion good practice in governance through assurance advice and assisting with the collation of the Council's annual governance review, which is underlined there. So that has been included clearly there as something that the Norfolk Audit Services are doing in their work. And then if we can turn to page 272, you'll see there that there are some more words that are underlined. So I've added in there that there are external reviews of the risk management framework, which is in place already. I've added annual governance statement processes, and also money laundering reporting officer arrangements are there. So the bullet points that are underlined after that explain how the process works in terms of the sort of collation of the evidence, the collation of self-assessment checklists, that those are collected by management. We're very grateful for the work that the executive support team do in helping us for that. There's a working group of key officers that reviews the draft annual governance statement, and it's also considered by the Council's executive leadership team. And ultimately, the annual governance statement is signed by the leader and the chief executive. It is their statement once it's been commended to them. And also the draft statement is then reviewed by the external auditor as part of their work. So there is quite a lot going on there, but I think the key point is about the independent checks that are done beyond my team. So that's really it for putting it forward. It's to make sure that the committee is clear and understands and is happy with the arrangements for my team helping to collate and bring together the annual governance statement. One of the key points is that we would be expected to look at it in any case, but that's happening organically through being involved. One of the other points is my team have that ability to get out, and if we need information or whatever, we can make sure that that's achieved. One of the key points of us being involved is this annual governance statement document needs to be published to the same time frame and beside the accounts. So for Harvey, this is confidence for him, if you like. He knows that the accounts are being prepared by his team and that they're going to get there on time, as they should, to the right quality, and they will be audited and found to be satisfactory. The same goes for the annual governance statement. That plays into the value for money conclusion. So it's really important to get that statement correct, complete, and accurate on time for the auditing. Otherwise, that could hold up the accounts and so forth. They are taken together. So they are really important documents. They need to be got right. So that's why historically it's been a case that it's been something that it's been quite helpful to have that close to hand, if you like, in terms of making sure that happens and not necessarily relying on another director somewhere else. So thank you, Chairman.
Thank you very much, Adrian, and thank you for all the work that yourself and your team do. Do we have any questions from the committee on the report? In that case, I will turn now to the recommendations. We have been asked to consider and agree the NAS terms of reference as set out in Appendix A and the Code of Ethics as set out in Appendix B of this report, and 2, confirm that it accurately reflects their understanding and expectations of the internal audit function, and 3, that the internal audit mandate provides the appropriate authority, role and responsibilities of the internal audit function. Those in favour of agreeing with recommendations, please indicate by show of hands. I can confirm that the recommendations are agreed. Turning now to item 12, yearly update of the Audit and Governance Committee 2025 to 2026. Adrian, would you like to introduce the report?
Thank you very much, Chairman. Yes, so this is another yearly report reporting back, and this one feeds into the annual governance statement as well, providing another part of the whole lens of governance arrangements and assurance. So this one is an update of the Audit and Governance Committee itself. The report sets out the, it looks at what the terms of reference is for the Audit and Governance Committee, and it reports back on whether that's been achieved during the year. So I appreciate there's a lot of new members here, if you like, so I'm reporting back on what's happened. But what you'll see here, this is bringing back and summarising the work that would be in the minutes and agendas of the Audit and Governance Committee over the year. So it's bringing that all together. It's also comparing it to the standards that are corporate governance standards that are set out for what an audit committee, audit and governance committee would be expected to do. What are the good signs, hallmarks of a good committee? So this report endeavours to bring that together and make an assessment of whether the committee has been over the last year, whether it's been meeting those requirements, and I'm happy to be able to report that I believe it does, and you'll see from the evidence and references that are there that that's happening. And what I would say is I obviously look forward to assisting and supporting this committee in working through this year in terms of that, so that those results can then be reported next year. So this is sort of a preemptive report on what will happen for the committee, this committee, and your work that you do. So happy to take any questions. Thank you very much, Chairman.
Thank you, Adrian. Does the committee have any questions they wish to ask? Turning now to the recommendations, we have been asked to consider and agree, number one, that the arrangements for audit and for governance are satisfactory, and note that the committee has terms of reference which are consistent with guidance and best practice. Number two, the action to further strengthen the work of the committee by considering how the HOIA and the Council operate in accordance with the relevant guidance and best practice. Those in favour of agreeing recommendations, please indicate by a show of hands. I can confirm that the recommendations are agreed, and so we will turn to item 13, the work programme. Adrian, would you like to introduce this, please?
Thank you very much, Chairman. I'll keep it short. So this is a regular report which helps the committee to understand the work programme and how it's set out over the next couple of meetings, and to see the topics that are being covered. Those topics tend to be, there are sort of standing regular quarterly reports, as I was mentioning earlier. Then at the particular times of the year, you'll find there are the annual reports, which you've had many such reports today. So the reports that are coming have been set out in the report here for the 15th of October. The November 26, November this year meeting, I need to mention that the date needs to be confirmed, because this is the meeting where we would be receiving the accounts for this committee's approval, and with the annual governance statement as well. Now that is determinant on the external auditors. They're busy away right now doing that work, but assuming that that work goes well, then we will be agreeing on a suitable date to set and put into the calendar for those accounts to be brought to this committee to do your work in terms of approving them. So we haven't set a firm date for that at the moment, but that will be worked through as we get more certain of the timetable. And then the next one is the reports that would be due for the 9th of February next year. So hopefully that's clear. Now, There is a point at 2.2 on page 291. The committee may wish to propose further reports on additional topics relevant to the committee's terms of reference, if you so wish. So this provides you with an opportunity to see what topics or presentations, I might say, if you they would come along with a report, but it's quite usual for the Audit and Governance Committee to ask for some more information or knowledge about a particular topic. For example, the reasonable assurance topics I gave earlier in terms of cybersecurity, there was a presentation that was done not so long ago, but there are other procurement, governance, financial management. There are areas, so if the committee wished to have some more information or assurance, that's actually a good thing in terms of sort of your knowledge of it. Gives you an opportunity to ask any questions and to understand and get a bit of a deeper dive into some of the areas beyond just the regular reporting that you get. So happy to take any questions. Thank you.
Thank you, Adrian. Has anybody got any questions on the work programme? Yes, Councillor Shibley-Sexton.
It would be good if we could receive more information around SEND, considering it was rated so highly in the RAG register and it costs so much money, but also the amount of children going through SEND is steadily decreasing. So it'd be interesting to learn more about that, if that's possible.
Adrian, is that possible?
Thank you, Chairman. Yes, so what I can do, I can, if I put together a sort of perhaps a brief as to the areas that you're interested in. If the Chairman is in agreement, then what I can do is I can contact the relevant Director of Service for Send in Children's Services to see whether they would be able and to put someone forward to provide some more information. But we could sort of perhaps clarify the brief for that so that they know what the committee are interested in. But that is something that could be done. There will, I think there is probably, Thomas isn't here at the moment, but I think there's probably a risk in the risk register as far as SEND. Perhaps if it isn't at corporate level, it may be at departmental level. So that's something that they could talk to. So it's perhaps something that could be tied up with the risk reporting, and then to do a bit of a deeper dive beside that into a particular area, if you like. So it gives it a bit of context in terms of what it's about, in terms of the terms of reference of the committee, because if that's something that you're already looking at risk, and this is an area of risk, and that's a good way to look at it, and the lens to use. So if that helps, thank you.
Thank you. Councillor Mackie.
Yes, thank you, Chairman. It's on the same vein, whilst not wanting to, put ideas in the mind of the administration, but as a good corporate individual, the risk register on children's services today was flashing red in terms of its overspend. And I think that's probably, an annual element. And I think, to get under the skin of what's going on there, what's driving that, the demand, and, we've had presentations from children's services before, but I think given the movement in the risk register, that might well be worth considering. The other two I had was responding to the external auditors and their gap analysis on our assurance. And just, it's probably that Joe's probably all over this, but I think be useful for us to be able to close that gap in the minds of Ernst Young and reassure committee members that what they had flagged as a pathway to whatever it was, that we are on it and understand what the needs are to close that assurance gap. And then the last one is something I raised earlier, is around local government reorganisation governance. Now, the clue's in the title of our committee, and at some point the questions will be put, what does the governance committee know about the governance of the LGR? And I think, as an item, I know Harvey gave an answer there, but I just think that as we move forward, and we're meant to be vesting, as I said, on the 1st of April 2028, so less than 2 years' time. We do have elections next year for the shadow authorities, but I think with the Chief Executive going, who was the county lead for local government reorganisation, I as a member would have been wanting some assurance on the governance of LGR going forward. We touched on it just with our data, how that's going to be configured, but generally as a governance and decision making, be really interested in that. So things to consider as a forward work programme. Thanks, Chairman.
Thank you, Councillor Mackie. Adrian, would you like to respond to that? Thank you.
Yes, thank you. I think, yes, I mean, these are all topics. So I think in terms of, so I think it's balancing the time of the committee, if you like, so not wanting to push them too far into the future, if you like, and them not to be perhaps as relevant later on, because you meet quarterly. So if there's 4 and the 4th one could be in a year's time, so perhaps other options are that we might be able to give some details either as part of existing standing presentations around risk, so it might be something that could be added in terms of Thomas's reports, or we could bring a report, if you like, that might give some details that might be helpful as well. So I think that there's lots of good ideas there, and I think if I may, Chairman, if we can bring that back to you in terms of thinking about which ones might be a priority and which ones work with officers, and what medium might be the best way to tackle that. But I think that they're all relevant in their own way. Is that helpful?
Yes, more than happy to do so, and I'm happy to talk to any members as well about items they would like to bring up at future committee meetings. Are there any more questions at all from any members? Nope. Turning now to the recommendations, we have been asked to consider and agree 1, the work programme for the committee as presented, and 2, if further information is required. Those in favour of agreeing the recommendations, please indicate by a show of hands. I can confirm that the recommendations are agreed. Thank you all for your time today. The next meeting of the Audit and Governance Committee will be held on Thursday, the 15th of October 2026. Thank you very much.